Netflix rewinding some of its recent gains this morning. Despite earnings that topped estimates alongside double-digit revenue growth, the company also raises its full-year revenue guidance, citing healthy member growth. Joining us now is Loop Capital analyst Alan Gould. He maintains his $11.50 price target and hold rating. Was there anything in this report not really to like, Alan?
Good morning, sir. No, the report was fine. Was there any real surprises in the report, I would ask? We thought the 2Q would be better than consensus estimates. We thought they'd raise their full-year revenue guidance, that they'd raise their full-year operating income guidance. They did. The revenue guidance was a little more than anticipated, I think partially due to FX. The only thing not to like, maybe there's some discussion about their engagement. In the U.S., engagement's relatively flat. The YouTube engagement is growing quicker than the Netflix engagement if you use Nielsen's the gauge. Now, Netflix, listen, their engagement is great. It's still 8% of households. They say they're going after the non-Netflix, non-YouTube, 80%. And their content slate's a little more back-end weighted this year.
Although I had heard some going into the print, Alan, some had said their benchmark on engagement was maybe plus 10. Was that too pie in the sky?
I think plus 10 is too high. I mean, the highest that they've ever been on this Netflix gauge was 8.6%. So I don't think anyone's really expecting it to be 10. I mean, the other thing is Netflix did come out with their second half engagement report. First half engagement report. I'm not sure if you're referring to that. And that was up plus 1% to 95 billion hours. They say on a per user household, that was basically flat as it's been for the last 2.5 years.
Are you on alert for some of the pricing action across the streaming space to result in elevated churn?
I don't think they've had elevated churn. The interesting thing here is that I think the price increase was very well accepted. So the churn has not increased here. I think it's just the competition, frankly. YouTube is gaining share, short form video is gaining share, and free is gaining a little bit of share with Roku and Fox's Tubi especially.
Why are you on hold with this name? If they have user growth, engagement growth, a good slate coming, advertising is starting to work for them, and this is what most of your other fellow Wall Street analysts are saying.
Yeah, sir. It's purely a valuation question. I mean, I've got the company earning north of $26 next year. I have it earning almost $60 in 2030. But, it's 40 times next year's earnings, 20-some times earnings 5 years out. I think that's fully valued in here. It's really just valuation. I mean, these guys have knocked the cover off the ball. They've looked around every corner. They've executed better than just about anyone. I mean, they've basically taken over the traditional media business.
Okay, Alan, thank you for joining us with the first take. Maybe that's part of the sell-off today, that question. Alan Gould from Loop Capital.